Our dollar fund delivered a return of 4.9% during the quarter, ahead of the global peer group return of 3.9%. For the calendar year, the fund delivered a return of 21.3%, meaningfully ahead of peers and placing it amongst the top 10% of global flexible funds tracked by Morningstar. Global equity markets experienced a strong close to an already good year, with the nascent third quarter rally in emerging markets and cyclical sectors largely sustained during the fourth quarter. Bottom-up equity selection remains the key driver of returns within the fund. While the fund's underlying equity component lagged the MSCI World Index modestly during the quarter, we nevertheless managed to deliver over 700 basis points of outperformance of the index over the course of the calendar year. Blackstone, Moody's and LVMH were the strongest contributors to the fund's return, while Boeing and Reckitt Benckiser were the notable underperformers. Our asset allocation efforts over the course of the year were largely successful. We continued to manage the fund's overall equity allocation and risk tolerance in accordance with the valuation discount observed from our global buy list. We remained meaningfully underweight global bonds during the course of the year, and this proved to be the correct decision, albeit that the build-up of cash and the fund's short-duration US dollar bond position ended up costing us some performance in relative terms. Following a year in which the underlying equity component of the fund delivered a return of over 35%, it should not be altogether surprising that we review prospective returns from this asset class as less attractive. Investors in the fund can therefore expect that the equity allocation is likely to be reduced and that cash remains the default asset in an environment where we continue to view global bonds as unattractively valued.